The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. And we've got action in this market. And we need to get right to it. We had some big swings. They really were pushing the market earlier this morning. And on incredibly light volume and a great deal of these ETFs. I was watching some of them that normally have a million and a half shares, and they were moving it on 100-share lots and every few minutes, and just at the highs. And so we've got these major reversals out here. I wouldn't get too far in front of the cart, in front of the horse. This is options expiration week, and what we do know is that they sold a lot at the top. Now, what they'll probably try to do, although they may not be able to, and this is why I remained short without blinking this morning, that the ideal for these option market makers would be to hold this market up until next week, at least a little bit. In the 2000s would be fine. Ideally, 2025, 2030 is where they'd like to see this market expire. And they may still additionally try to put some juice into this market just for a few more days and let a lot of those options expire worthlessly. And, you know, they probably sold a lot more puts today, which actually puts more pressure for the market to go higher later in the week. And this is, of course, Tuesday. We've got 4 more days. If I see a big change in it, I'll talk to you about it tomorrow in the options. But I was been actually working on updating my options software while I've been watching the market today. And you just around that 2056 level on the S&P cash, there was just nothing up there. And I don't like to even bring up margin too often, especially with traders that are unfamiliar with when to use it. But there are a few times every year where I'll go ahead and go options and go margin, at least to the close. I don't like going margin overnight. But this was one of the days out here where if you were watching the market, I don't know how you didn't see this thing really want to break. And, of course, there was a reason for, at least a news reason for it, and we'll talk about that a little bit more. But don't be surprised if they try to keep this thing up about 2025 and we see the real break next week in the market. Options expiration, they, like I said, sold a lot of calls up at the highs, with people courting, basically trying to just all the cash coming in, let me put it that way. And actually, I was lucky enough to have one of my subscribers ask me yesterday about one of the ETFs we're in. And he says, "What's it doing?" I said, "Guess what? It's in a bubble. It's going to do these kind of things, and basically you're just going to have to sit on your hands. You never know when these breaks are exactly going to happen, but it's going to be very, very hard for the bulls to put a happy face on this." But they were out there this morning, and this is about 10 o'clock. This was the most of the discussions around the trading floor.
Well, let's put some lipstick on this pig.
Of course, by about noon, we started having news out by one of the big home builders, and we'll get into that in a minute.
This is Houston. Say again, please.
Houston, we have a problem.
And we had a problem because they dropped the Baby Ruth in the punch bowl today and said that we were having problems with our margins because of higher prices. And most of those higher prices were a lot of things for houses other than wood that were coming from overseas, and the costs had gone up rather hugely for them. A lot of things that are made overseas, although U.S. manufacturers A lot of things you would think that with the drop in metals, faucets prices would drop and a bunch of other stuff, and not so much. With the move in the dollar, they really over the last couple of months have seen huge increases, and we'll get into that. Of course, talking about bubbles on this day in pretty much in 2000, when we're kind of at a bubble level, I think, here now, but oh, I forgot to play my little thing.
And it's all just a little bit of history repeating.
There is nothing new in the stock market. What has happened before will happen again, so you better know your history. On this day in 2000, Federal Reserve Chairman Alan Greenspan, speaking to the Economic Club of New York, imagines an observer looking back in the year 2010 that future dweller, he says, might well conclude a good deal of what we currently are experiencing are just one of the many euphoric speculative bubbles that have dotted human history. The next day, the NASDAQ composite was up 2.7%. And that we were going, basically after everybody came in and sold in 2000, because, of course, the tax laws had changed, and you went from, about 28 or 29% to 15% taxes. So everybody was waiting for 2000. So everybody came out shooting at the beginning of the year. And, of course, had a pullback from those first few days, trading days of 2000. Then the reaction and then the slaughter started about March that year. But there is nothing new out here under the sun. And, of course, on this day in 1937 also, the first gold showed up at Fort Knox. So a lot of interesting history out here, but nothing like the kind of problems we have. And I wanted to check this out. We're at 2012 and a quarter, 2011. Oh boy, I have to do this quickly. 2011 on the S&P cash, 2.5 billion shares. So we had some decent volume. We're going to have some good volume out here. Look for about 3.5 to 3.8 billion shares by the end of the day. We'll have to see. Now at 2010, I could see this market go down to 2,000, bounce and come back up a little bit. I'm not going to try to intertrade this. I'm probably going to sit on my hands short for a while. There was a reason that I brought up, I think on last Friday in my newsletter, and maybe we'll get to that too. But there's one of the best indicators that the market's ready to fall apart was given, and I put it in my daily newsletter. But maybe I'll get to it today. There's so much going on here. Hopefully we got time to get to it all. Of course, a lot of people are talking about the home builders out there, but it's been a 1-2 punch, and it wasn't just KBH coming out, which we'll get to in a minute. It was a lot of these dubious home, I don't even know what to call them, but these firms, especially out in California, had been buying a great deal of these foreclosed homes with or poorly performing loans on them and started renting them out. And they hadn't been foreclosed on yet, but they were working out deals with the folks that were in them. But the big cheeses in California basically said today that they will no longer have a license to do that in California. They do some business outside of it, but all of these companies looking just rather horrifically bad today. OCN is the biggest of this one guy's firm. He had many firms doing the same kind of thing. ON Financial Corporation, ONC, down on heavy volume today. Some of these other firms out here in this same field, NSM, Nation Star Mortgage Holdings, similar. A lot of people are kind of worried it isn't in the same bunch, but OCN is. What else do they have out here? I think I put them in there. AAMC, you want to look at this one. Outsource Asset Management. These companies could be in some horrifically bad news coming up. ASPS is another one in these bunch. It's down on 2.5 million shares today. So my guess is these things will not quit sliding. I looked at them last week. They started popping up on some of the radars that I had, and you couldn't short any of these. So I have a feeling that the fix was in on these for a while. Trying to remember what. HLSS is another one. Home Loan Servicing Solutions, HLSS. And it didn't help, of course, that KBH Homes came out and dropped, did the old Baby Ruth in the pool bit from, what is it, Caddyshack. Let me see where my things are here. There we go. But there are a bunch of them. OCN, ASPS, AAMC, HLSS, and RESI. I didn't get RESI in that list, did I? RESI? Left it out. Let's add it. RESI. Another one of these firms all doing the same thing, which is, I mean, these are the kind of charts and the kind of days out here and in that sector. Especially as leveraged as these companies are, I could see why everybody was short to the hilt on these things already. And my guess is that these things are headed for the penny basket rather soon. Although they do have some additional assets, so they may not be going broke. But looks like they're going to be under some significant strain. These things have been selling for a while, coming up on the news, and today it came out. The next one we want to get to, of course, is... let me get to it here if I can find my thing. There we go. Yeah, why is that not doing that? Okay. It was KBH, and again, we were talking about things going along fairly swimmingly with KBH after they reported their news. Then they got into the conference call information and said that their margins would be squeezed in the first quarter by higher costs for labor and materials and increased sales incentives. Most of that, if you go back and look to it, was on materials. Some of it was wood. Basically, they call them stick-built houses, right? Some of it was wood, but a great deal of it was a lot of the things that we take for granted that are made overseas that are put in our houses today. Some of the stuff is made in the United States, like toilets and stuff like that. But a great deal of things like faucets and other materials have greatly increased with the dollar move. And this is what I've been waiting for. I've been talking about for a while. There had to be a break. And that break had to be higher costs for a lot of materials coming back here in the United States with that dollar move. You just couldn't hedge out a 10 or 12 point move. And of course, when we look at the dollar index today, there is no sign of this thing backing off. It's at 92.29, 31 cents higher. It's solidly holding in this 92 range, which would suggest if it can hold it, that maybe 98 is the next move back up. And a lot of times, if you've ever watched these currency moves, they get started, they do not stop. They straight line until they get back up, and then they'll hang out for a while. And of course, that should be of concern to everybody because these rapid moves always put huge amounts of a strain on the financial markets. Now, we'll talk about the strain in the financial markets. The Fed's one goal is to let the air out of this as slowly as possible. So we're going to talk about that when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we've got a very interesting day out here. Kind of stuck at 2012 right here for the moment on the S&P cash. And 2.64 billion shares, so volume has really picked up here since just a little bit before noon, and KBH and some of the other news came out on some of these housing stocks and the housing financing sector. Basically, one of the things that you should always watch out for is a market that has a basically more decliners than advancers, and I look at the summation index. It had made a thing called a fish hook, which is one of the more powerful patterns. I'll try to put something together and talk about it later in this week. But we'd made a fairly decent fish hook, and it is one of the best indicators that I've known to see a market that truly fails and fails fairly quick. The downside to this market is that the Fed, of course, has had its implied put on this market forever. And the one thing that they don't want is the air to come out of this market very quickly. They would like earnings to come up to match what the EPSs show in the stocks that we have right now. And of course, that's much lower. And of course, the stocks are much higher. And they want it to meet in the middle over the next year, year and a half, or 2 years, try to let the air out of the market. Again, the one thing that they care about is orderly markets. They don't want huge, fast movements. And that's exactly what we've got in the dollar market. So the question is, are you going to bet on just lower markets, or are you going to bet on lower markets that crash? And my belief right now is the Fed is going to try to put in some fingers in the dike for every new one that starts leaking. And there's still going to be some leaks, though, and I still think we're headed down, but this may be one of those times where you can just sit on your hands for 6 months or a year, and you'll be better off than trying to catch every little move in the market, especially if we go back to 2000 and some of the other huge move down. There were rapid moves back up, 50, 60% moves, especially in some of those dot-com stocks. They go from $200 to $100 to $150 in 5 minutes. After, of course, coming down $100. That took 2 days or 3 days or 5 days. And then they'd be up $150 in 5-10 minutes. And that's what you really need to watch out for in these very fast moving markets. My guess is the Fed is very aware of it. And of course, we don't have near as many flaky companies as we did back then. Most of them were basically shams wrapped in frauds and layered with a sprinkling of total blue sky kind of PR. But it is rather interesting for some of the stocks we have out here. I did want to look at some of these stocks, and if you want to look at the reversals today, Ryland Group shows you the kind of dark cloud cover. If you're looking at the, what am I going to try to say? Looking at the candlestick name, you might want to look that up. But these stocks that basically are wiping out the last few days are probably not the end of all this market. And of course, my guess is that there will be endless parades of what was this? The Nixon saying something about nabobs of negativity. There'll be a lot of people out there saying everybody is all wet. The market can only go up. And so we had a little volatility here. Just buy it again in 3 or 4 days. But I've got some pretty good symbols that this is basically what we have in the market. That is driving to higher highs. You had a lot of volume. It all came in and it all reversed in the same day. So is the question, can this get retested? I think the answer is yes. I just don't think it's retested the next year. I think we've had a good indication. A lot of these are blow-off tops. You had all the volume and the thing turned right around, and that's going to make it incredibly hard. And also, one of the things is these stocks did break over previous highs. And, of course, the shorts covered on that. And once you do have no shorts to cover, the stocks can fall just like we saw today. In fact, we probably saw a lot of people covering their shorts, thinking the market was once again going to take off. And, of course, with nobody below, had a big opportunity to fall. Anyway, Ryland, good example of this. Is there any? Well, I think we're going to have probably the biggest volume day that we've had since July 31st of 2014. So going to be a big day in this. Certainly the biggest candle we've had in the last year. We'll be back in a minute. We've got a lot of stocks to take a look at, and you can always give me a call at 877-927-6648. You can post a message in the den. Sparrow Agnew, yeah. Negative nabobs of negativism. Yes, that's what it was. Thank you guys in the den. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we go back to the trading floor at the New York Stock Exchange. We've got a little sound clip of what they're talking about down there.
Like I picked the wrong week to quit drinking.
Yes, they did. And we go to Marcus in Florida. How you doing today, Marcus?
I'm doing good, thank you. I just want to compliment you. Many years ago, I don't remember, you'll probably have a better recall, maybe in the last 4 years, Molycorp, MCP. You talked about
May, it had to be about May 20th or May 25th of the first year I started doing this show. I had only been doing it about a week or 10 days. And
well, that was great call, man. That was hilarious.
That was it. Now, unfortunately, not so good. So what are you thinking about Molycorp doing here?
No, I'm just calling to compliment you.
Oh, okay. Well, I got out way too soon, but made a lot of money on it on the way up. But this is a great example of a stock, what to watch for. And a lot of people say that you don't watch CNBC. Well, I watch it with the sound off and fast forward through hours of it with my TiVo box. Actually, it's a Verizon box. But this is one that I learned a great deal for with kind of a new revamped CNBC. And that is, this CEO was all over the place hawking the stock all the way up to 70, from about $50 to $79. I was already out of it. I think $45 or $46 or whatever it was. We made 300, double, 200% move on my money. I think I bought it at $14.50 or $15 or something. Kind of time to remember. But this was one of the stocks that I started warning everybody about because the CEO was constantly on CNBC. And there is some things you can learn. I don't spend a lot of time thinking about what they say. I kind of look at it obtusely. But, this thing was something that this guy was just whipping this one to death at, and it scared the bejesus out of me. And I think
I got to ask you. I got to ask you. I mean, I heard all your comments, and they were just like you just said. Okay, this guy's really on too many shows, using the word, we can call it pumping it. But my feeling was, I forgot what they make. They make a product out of the earth that's very important for something. How could it have gone so bad? What's gone wrong? What's going down?
There were two things that happened. It was at the very sweet spot where China was trying to corner the market in rare earth minerals. Yeah. Now, rare earths are not that rare, but it is like mining gold and platinum. It is a very small percentage of what you dig up actually becomes rare earth minerals that you can make. And the most important one to the United States was a thing called neodymium, which you make super strong magnets out of for smart bombs and a lot of other chemicals that are used for GPSs. And basically, if we went to war, we have to have a source of it here in the United States. Molycorp actually formed a company and bought a mine that had been closed with the support of the United States and most of the congressmen in the United States. Because we wanted to have somewhere to go get this. Well, China at that time was basically had everybody over a barrel because they had the last mine in Mongolia, and they had they had the army around the place, so no one could sneak any of it out.
Wow.
And so when these guys came out, prices were 10 times higher than when they started really moving this thing. And much like the Saudis now are trying to trash the entire market in oil, the Chinese went in and tried to trash the entire market once additional mines started getting going both in Australia and in the United States. And they ended up losing a huge amount of money in the World Trade Organization, dropped a hammer on them. So what they did was they started letting people export it by dragging it across the country's borders and still sell it. All they wanted to do is make sure that we didn't have it. They look at it as a strategic initiative to make sure that we don't have a good supply of this stuff lest we go to war with them. And so they saw both this and about 2 mines in Australia really firing up. Japan actually bought almost all the production from Australia, and that basically sewed that up. And China has been trying to basically kill off that part of it and make it look, put a bad taste in our mouth. But basically, we've got countries acting like the Saudis and like China, trying to make sure that certain elements that would be very important if we get in a tiff with any of these guys, we don't have. And I think it's important to have both of these. This stock, of course, has a real big problem if anybody's looking at it, and that is that there were a bunch of warrants issued, and the warrants, of course, the stock going the wrong way. The person that had the warrants started exercising them and selling them at a loss, and that made me think that this thing was going to zero. I tried to buy it at about $1.10 or $1.15, thinking that maybe it would turn around, but it broke the last line of support. I think it was 114. Why that thing went sideways, it actually looked pretty good, and then the Chinese dumped a bunch more. But I forget how much they're going to lose. I think they got fined $500 million, something big. From the World Trade Organization for dumping it. But
can I ask you a question? A second. It's flipping the subject for a second.
Mm-hmm.
All these future, what do you call, helicopter little drones. that are going to be buying by the public for Christmas time was a big thing. Have you seen those? I'm sure you have. You know.
Oh yeah, I've played with them. In fact, I've gone to classes on how to build them.
Okay, that's where I'm coming from. I'm coming from that
What
angle.
about them? There's a couple of companies that are probably going to go public next year. I cover them in the Tech Insider, but I don't know if there's that much business in there for them. There are a lot of companies that build them. Most of the parts are fairly generic. It's going to be tough for me to see that that's going to be a single company doing really well. To me, it looks more like a GoPro kind of thing where there's going to be a lot of smoke and fire at the beginning. In fact, that's another one that looks pretty ugly today out here. We could get into the news on that one, but there's a pattern out here that,
Aside from business, those little copters with the good quality GoPro similar camera, they're going to come down in price and they're going to go up in quality, and everybody's going to want to have one. I don't care about the stock market idea from it. I just think, I'm 65. It's a fun toy. When I was a kid, I used to have an airplane on a long string that I would fire up, and it would, you know what I'm saying.
Yeah. The problem I have with them is that the FAA will be controlling them, and it looks like the regulations are going to be much tougher in the near future. So if you were going to buy one, I would say that probably this year before they come out with the restrictions on them, you probably want to buy them probably in this year. But there are a couple of them. The Parrot is my favorite of the ones you can buy. The Tampa Hackers. Huh?
Would you expand on that? The Parrot, what is so special?
Take it probably the rest of the show to talk about it.
Oh, no, just a quick overview, a sentence, 2 sentences.
It's all about building these things as light as possible and having software in them that makes them very stable. And if you lose a signal, they come back to you like a boomerang.
The GPS.
Yeah. So there's a lot of that. It's the electronics and making them light. But the Parrot has a very nice camera mount, and pretty much the one that everybody's talking about if you're going to buy one and not build one yourself. But a great deal of these people are very much like the model airplane kind of club, and they are building them themselves and learning how to make the electronics and doing it a lot themselves. So there's more of a ham kind of a ham radio feel to the market than a lot of people know right now in those drones, because most of them were built by hand before the market really started to come out with a lot of people building them. So, but
there's schools.
What's that?
I know there's schools for that particular niche. I think they're called UAVs.
Yeah, yep. If you're bigger and you're bombing somebody, but just because you brought it up, I do want to go back to one of the biggest things you could learn from MCP, and that was that CEOs all over CNBC. Other ones that have been all over CNBC have been the GoPro guy, and of course this thing was at $98 and having a horrible day today. Another one that you can bring up a lot that I disliked. I love the company, but the guy has been nothing but on CNBC every other week. Was the 3D Systems guy, and and we did well with those, but I tend to stay away from bubble stocks because they tend to do exactly this. They go up, and it's very hard to sell a stock or even get anybody to sell it when everybody thinks it's going to go to the moon, but it falls out of bed as bad as this one did. And I learned from MCP on this one, and I think we shorted it 3 different times and made some huge money on 3D systems on the way down, along with some of the other companies in that. I think we had 3 shorts on 3 different of the 3D printer companies. But again, you're probably looking in that market is going to be very similar to that, and there's going to be a huge amount of buzz in those drones as they go public over the next year. And they're probably all going to have a chart that looks pretty much like this, although I don't think they'll go out of business as fast as MCP. They're probably going to look more like this DDD chart. And GoPro.
Can I just tell you something that I know the military is working on down the road? There's no official name for it, but I've given it the name, the Humming Killer Drone B. And what it is, it's about the size of a hummingbird. It's a drone. It's really a direct targeting bullet in the form of a hummingbird.
The Israelis already have one. It won't kill anybody, but it's the size of a hummingbird.
It's going to be something. I mean, in 5 years, the technology will advance. Improvements will come, and it'll save soldiers from having to go in the middle of some crazy fight. Just send in those hummingbird killer drones, and I'm thinking that the world's going to change on a dime once that really comes to fruition.
Well, they've got a bunch of them in Israel. Some of the biggest drone companies are over there, and they've got the little tiny ones. They don't blow anything up, but once you see where someone is, it's not a big deal to put a round on target. So
right.
And
Amen.
So that's pretty easy. But anything else?
No, it's nice talking to you.
You bet. Well, thanks for the call.
Okay, thanks.
Yep. Someone said in the den, the tech is already here. Certainly is. So you just have to look at that. Anyway, we were looking at some of these other stocks. And again, I want to go back to these housing stocks because if you're a big fan of reading the candlesticks, these are, at least short term, are about as wicked and ugly as they get. When it came on the show, I said, don't everybody get all in lather yet. This market probably not going to fall apart. We got to a low of what, 2013? Is that right, 2013? Let me update this real quick. So let me see here. 2008 on the S&P cash. We're at 2018 now. So it is going to be one of these things where you can expect extended volatility, but as I've been saying the last few days, look for 2 steps back, 1 step forward. We had kind of the 2 steps forward this morning, or the 2 steps forward and 3 steps back by the afternoon. So we're going to continue to see a market that moves quite like this. What else did we have out here I wanted to look at? There are a few other stocks that were very interesting to me. Got a China stock actually getting a little reaction off the bottom here. It's WBAI500.com. Just interesting in the fact that you've got some volume and a little counter trend out here in the market. I would not be surprised to see that maybe we're going to see more of that out of China in the next few days. Things hadn't looked all that good for them out there, but I'm not going to be buying this, but certainly we're probably going to see some pretty wicked pops in it. Another retail stocks, Tilly's, TLYS, is another one that's bucking the trend here later in the day. But this had, of course, a huge gap down on the November 27th of 2013. That gap tried to get filled on March 19th of 2014. Nice big gap up on this thing today. And when we look at what they do, it is engaged in retail, casual clothing, and footwear. This has been probably one of the most beaten up sectors out here. A lot of people short. So you get a little good news like Lululemon or something like that. And it doesn't take much to run these shorts out of these things. Until he was just upgraded, basically the only thing that happened here. But enough shorts to squeeze them. And this one's holding up a little bit better than the rest. Anyway, we'll be back for the last segment here of the Power Trading Hour in just a minute.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we go back here and look at it, 2019 on the S&P cash, 2.89 million shares.
There will be a giant sucking sound.
And yes, there was a giant sucking sound today, and mostly in the housing business. But one of the stocks that popped out here is one that you can learn a lot from. We talked about MCP and 3D systems and some of the 3D stocks and the hype getting before the earnings. Emulex was trading at about 100 to 110 bucks when this thing fell out of bed, 30, 40 bucks all at once. And this was on I think a September 24th press release in the year 2000. And there were other companies like this, but this one was traced to a former wire news service employee who basically made $250,000 shorting the stock. Pretty easy to find these people because, of course, they go all in on it. But always know that when you read the news, you got to kind of have your filter up. It doesn't happen as much as it used to, but Emulex is one of the companies that it was the poster child for these scams in the news. Today, the news is not a scam. It basically had some fairly decent earnings. These guys make a network cards for big networks. ELX is the symbol on this. Nice pop back up. But again, a lot of these stocks popping back up, filling their gaps, but nowhere close to the gap downs. And there's so many of the stocks out here that are like this. Probably wouldn't be shorting a $7 stock, but this one was probably a lot higher. This thing did everything it should by filling its gap down. That gap happened on May 1st of 2014, 13.2 million shares down. We got about 6 million shares up here today. And that's, if you own this stock, you should be out of it right now. Should have been out of it at $7 or whatever when it filled that gap, because now you're going to have everybody that was along this thing the previous year that's just praying to get out of the stock up against you. So risk reward pretty horrible out there on this one. Had some bad news in some of these gold stocks. Humana has not been one of the stronger stocks out here, down on fairly strong volume today. I'm sure Tom O'Brien will key in on that. Another one that looked fairly interesting, if I can get it going here. Come on. Did we just lose the internet? There we go. Gold Corp. Another one that kind of did a little reversal out here. This one had decent volume today, 14 million shares going up against the November 19th, 12 million shares, but a reversal nonetheless. You've got a high volume low that was about 2 cents lower. And there's a few of these stocks out here that would be rather interesting to me. That October 31st low at 1701, again, missed it by 2 cents. You had some nice low volume out here. The question is whether or not you wanted to maybe look at other gold companies here that actually had tested their low on lighter volume. Again, this one came in with about 50% of the volume out here, but maybe you're going to need some consolidation. I mean, there's some pretty nice bounces off this one. $5 up from the low today, from that December 24th low. So pretty nice move on a $17 stock. So I don't know what else you could say. Again, some of these other stocks out here like GoPro, you want to be watching these. And of course, we're pretty much now seeing those shares that were available with the lockup date on December 23rd, kind of making it to market, back down under $50. So I think we're starting to see the bloom come off the rose out there. We're going to see you tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to. And boy, if you're long, you better put a stop in. I bet Tom says the same thing in the next break. Anyway, look for Andy Heck after him at the 5 o'clock hour, and see you tomorrow.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.